IPCA Laboratories Q4 and FY20 earnings conference call hosted by IDFC Securities. As a reminder, all participant lines will be in listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note this conference is being recorded. I now hand the conference over to Mr. Nitin Agarwal of IDFC Securities. Thank you, and over to you, sir.
Thank you, Vikram. Hi, good morning, everyone, and a very warm welcome to IPCA Labs Q4FY20 and full year FY20 earnings call hosted by IDFC Securities. On the call today, we have representing IPCA management, Mr. A.K. Jain, Joint Managing Director, and Mr. Harish Kamath, Senior Corporate Counsel. I hand over the call to the management for opening comments, and we'll open the floor for question and answer later. Thank you. Please go ahead, sir.
Thanks, Nitin. Good afternoon. Thanks for taking out time and joining us for Q4 and FY20 results conference call. Today's discussion may include some forward-looking statement that must be viewed in conjunction with risks that our business faces. I will briefly touch upon some of the key performance highlights and then leave floor open for question answer. Q4 and FY20 has been strong for the company. Standalone net profit has income has gone up by around 20% to around 1,018 crores, and consolidated net income is up around 22% to around 1,087.49 crores. Indian formulation business in Q4 has grown by around 21% to around 430.96 crores. Export income during the fourth quarter was almost around 18% up to around 492.66 crores. Standalone EBITDA margins was around 22.29% as against 21.2%. It's up by around 1.08%. And consolidated EBITDA margins is also up by around 1.38% overall. And if you look at the key highlights of the financial year 2020, standalone income is up by around 20% to around 4,432 crores. Consolidated net income is up 23% to 4,715 crores. And Indian formulations overall income has gone up by around 16% to around 1,916.61 crores. And exports Exports have been very strong, around 24% up to around 2,143 crores. Standalone EBITDA numbers is up to around 22.41% in FY20 as against 20.75%. So it's up by almost around 1.66%. And consolidated EBITDA numbers is around 21.55% as against 20.05%. So it's up by around 1.5% overall. And overall standalone net profit is at around 652.46 crores, and consolidated net number is around 603.56 crores. This is also up by almost around 36% overall. And if you look at overall the turnover breakups, domestic business is around 431 as against 355.7 crores in last financial year. Exports of formulations, if you look at, it's around 282.47 crores as against 253.6 crore in last financial year. And overall formulation business in Q4 is around 713.43 crores as against 609.3 crores. So overall formulation income in Q4 is up by around 17%. API has done well. It's almost around 275 crores as against 211 crores, up by 30%, and overall is up by almost around 1,004 crores as against 833 crores. API is constituting almost around 27.38% of the business in fourth quarter as against 25.38% which we had last year, and therefore overall the pie of API has gone up in this quarter by almost around 2%. If you look at the standalone number for the whole of the financial year, then FY20, the overall domestic income is around 1,912 crores as against 1,646 crores. in last financial year, up by around 16%. Export formulations is around 1,221 crore as against 1,048 crores. And overall formulation business is around 3,134 crores as against 2,695 crores. It's up by almost around 16%. API business is, domestic business is up by around 24%. Export business is up by 35%. And overall API business we have done is around 1,173 crores as against around 85 crore in last financial year. And overall business numbers is around 4,367 crores as against 3,633 crores. So, and API business has accounted for almost around 26.86% to the overall turnover, which was last year around 24.35%. And so overall in pie API business has gone up by almost around 2.51%. And overall, if you look at our captive bagged formulation business, we have done a captive bagged API formulation business of around 1,728.35 crore in current financial year, which is accounting for almost around 55% of our business, which was last year around 1,454.58 crore. So that was around 54%. So 1% business of the captive API-based formulations has gone up in this particular financial year. Overall, if you look at our standalone gross profit for the quarter and for the financial year, the gross profit compared to last financial year, fourth quarter has gone down by almost around 0.41%. And for the whole of the financial year, it is down by around 1.96%. And this has been mainly because of input cost increase during the financial year and also higher ratio of API business in the overall business pie. But there has been good improvement in the fourth quarter as against 1.96% EBITDA, the gross margins, which was down in for whole of the financial year. In Q4, it is only 0.41%. Overall, summing up the performance for FY20, I would like to say that our focus has been on improving productivity and utilization of assets and brand building. Our net asset turnover ratio has improved to around 2.3% as against 2.04% in last financial year. If you look at our return on capital employed, has improved on a standalone basis to almost around 20.2% as against 16.31% in last financial year. And if you look at our consolidated the return on investment, it's almost around return on capital employed. It's around 19.63% as against 16.58% in last financial year. Overall, the inventory days, if you look at, is almost around 107 days as against 108 days in last financial year. It's mainly because we were looking to reduce the inventory, but the finished goods inventory in the month of March has significantly moved up because a lot of the consignment which was meant to be exported, they could not be done because of the lockdown situation. As a result of that, finished goods inventory has little moved up. If you look at on receivable fronts, our overall receivable in current financial, in the March 20 is around 71 days as against 64 days in last financial year. And that is also largely because of a month in the month of March after the Janta curfew was announced, the domestic credit by whole industry has increased by around 10 to 15 days. We have also increased our domestic credit by around 10 days. And also export receivables also there was issues because most countries they were facing the lockdown situation. So remittances could not come. As a result of that, overall debtors has moved up by almost around 7 days by and large. If you look at the IQVIA March 20, our domestic market share has significantly improved. If you look at March 20, our market share has gone to around almost around 1.67%, and our rank has improved to 19 as against March 19 number of market share of around 1.58% and rank which was around 21. So we have jumped the rank from 21 to 19 in the in overall MET numbers. And if you look at our market share in represented market of the molecules free market, there also we have increased our market share from 5.36% to around 5.49%. The top 10 brand in Indian market has contributed almost around 57% of our business as against 56% in last financial year, with a growth of almost around 20%. The cost optimizations and process improvement was the major area which we are continuously working to reduce the wastages, improvement in reaction efficiencies in API plant. Some of the dedicated plants were taken up for automations that has given us the good consistency in output and also lower cost of production. Thanks for listening me. With this, I would like to open the floor for question answers.
Thank you very much, sir. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use hands while asking a question. In the interest of time and fairness to all participants, please restrict questions to 2 per participant. If you still have more questions, you may join the queue afresh. To ask a question, please press star 1 now. We have a first question from the line of Aditya Khemka from DSP Mutual Fund. Please go ahead.
Yeah, hi. Thanks for the opportunity, sir. Sir, what was our total net loss or profit in the P&L for Forex for the year, full year, consolidated?
1 minute. I'll give the numbers here. Thanks. For the quarter, your realized gain is almost around 3.54 crores, and we have made a provision for unrealized losses of around 24.41 crores. Overall, for the quarter, the loss is around 20.88 crores. And if you look at the whole of the financial year, the realized gain is almost around 7.79 crores, and the overall provision is around 21.75 crores. So overall loss on exchange is almost around 13.96 crores. And it's only because of, I think, there was significant movement in dollar to 75.66, as against March 19 it was around 69.15. Even though our fourth quarter average realization was around 72, but year-end assets and liabilities and forwards and everything mark to market was done at around 75.66. So there was these kinds of small losses are there. But by and large, now our assets and liabilities are balanced. The forex exchange. It's only by and large this loss is relating to certain mark to market on forward contracts.
Right. And this 14 crores net loss for the full year on Forex?
Yeah, that's what number I have given here.
Thank you, sir. We have next question from the line of Rahul Jain from Credent Wealth. Please go ahead.
Thanks for the opportunity. Sir, just trying to understand the domestic formulation business. We have had a strong growth in this quarter, more than 20%. And for the full year also, this is at 16% versus last year also, over and above 15% last year. So what has led to this strong growth? Because compared to some of the other domestic peers, we have done much better. So what has led to this growth, and how do we look forward for the next year or two to come? And sir, in the previous call, you had mentioned about talking about, our growth plans and targets and guidances for next 2-3 years. Where do we look our company from here on in terms of the growth for the coming 2-3 years?
Overall, if you look at our therapeutic performance of fourth quarter and also for the financial year, if you look at our pain portfolio in the month of April, March has gone by around 26%, and overall for the whole of the year, its growth is around 20%. Our cardiovascular and anti-diabetic portfolio has grown by around 10%, and for whole of the year is also around 10%. Our anti-malarial business in the fourth quarter was little better at around 16 crores as against 12 crores, so it's around 33% growth. And for whole of the year, this portfolio has grown by around 7%. Antibacterial has done very well for us in the current financial year, In fourth quarter, we had a growth of almost around 40% in antibacterial portfolio, and for whole of the year, it's around 35%. Another main business, like say CNS, has grown by 18% in fourth quarter, and whole of the year it has grown by around 20%. Our urological portfolio has grown in fourth quarter by around 18%, and for the whole of the year it has grown by around 24%. And ophthalmology is relatively new business and small business, which has grown by around 29% in fourth quarter. Overall, it is around 38%. So overall business growth in fourth quarter and also for the whole of the financial year has been good for us, and that trend is continuing. Yeah.
And sir, in terms of how do we look at this company for the next 2-3 years? We are also looking forward for the EC approval at Devas expansion. So you had mentioned in the last call that by June we are expecting the EC approval, and we'll do a capex of around 250 crores. So if you could spell out the plans for next 2-3 years in terms of our growth profile.
Overall, let's say that is a major capex we have planned, because on the API front we are continuously facing the capacity constraint. So around 2 or 3 plants will be put up at Devas, and we are expecting EC final hearing is over, and I think minutes are out. It's only the final EC has not come in our end, and till the time EC come in our hand, we can't even lay a brick. So hopefully we are seeing that in this month end itself, or maybe early part of July, we should get EC in hand, and thereafter we will be able to start the construction maybe by July end or so, finalize the contracts and everything. So monsoon may disturb the kind of schedule thereafter, and hopefully some kind of work will start only after September, after the monsoon is little settled. And hopefully in this financial year there will be only kind of civil work will happen, and most of the installations and other things will then go, because we will only get 6 months to set up the plant in current financial year thereafter. So hopefully the plant will become operational in the next financial year only. And overall, I think the capex number in the whole of the year may remain almost around the range of around 250 crore in current financial year, which will also include some of the initiative we have for the solar power, and maybe around 20 to 25 crore we will be investing in there. In current financial year also we have invested in solar and wind power almost around, for our captive consumption, of around 17 crore in current financial year. And overall, if you look at our guidance for the current year, we are there are a lot of uncertainties are there, and still there are many places our reps are not able to meet the doctors, and there are a lot of issues are still there. But we will be able to grow in the current year overall, maybe around in a range of around 14 to 17% in the current year, and maybe our EBITDA margins will also improve by around 1.5% in the current year.
So 14 to 17% is for overall company, right? At the company?
Yeah, overall company, yeah.
Mm-hmm. And any guidance on MR addition this year?
We are not adding much of MR in this year, because this is not the time to add MR, and hopefully we will be working with similar kind of strength in the current year, what we have currently.
So last thing on the remedial cost, this year, if I'm right,
financial year we have incurred almost around 16 crore, and overall I think in this quarter we have incurred around 3 crore on remedial things.
So this year also we'll do around 16-18 crores only in FY20.
I don't think so. Even that number will be there, maybe a few crores. So henceforth we will not talk of any remedial cost now.
Sure. Thank you, sir. Thanks a lot. That's it from my side.
Thank you. Participants, please restrict questions to 2 per participant. We have next question from the line of Ravi Naredi from Naredi Investments. Please go ahead.
First of all, great congratulations to give highest top line and bottom line of this company in this financial year 1920. So you and your whole team is, I am giving the congratulations for them, sir. And sir, what is the actual position of US FDA now?
There is no change in the situation still. We have done the remedials, everything, and informed to FDA, but when the FDA will come, we don't know. There are still uncertainties because in current situations, FDA may not visit. So it may take some more time. Very difficult to put any kind of guesswork on when they will come and when the plants will get approved. But as far as we are concerned, we are fully prepared and geared up.
Okay. And sir, one more request. Along with the result, if you can give investor highlights or some more information, we will appreciate this information. So it will be more useful for us. And sir, what is the current situation of debtors and stock in current quarter versus March 20?
Definitely, there is a significant liquidations of finished products has happened, and even there is an improvement on realization front. So on both the sides, there is improvements are there. Good improvements are there.
Okay. Thank you. All the best, sir.
Thank you, sir. We have next question from the line of Surya Patra from Phillip Capital. Please go ahead.
Yeah, thanks for this opportunity, sir. Just two things. On the first, on the one-off charge that you have, impairment charge that you have built in the quarter, can you just elaborate something on that? What is it all about and why at this stage? Because so if you can add something on that. And secondly, on the HCQS side, whether any number that we have already seen, and even in the current quarter, running quarter, even if we have played a kind of important role there for the US, how big is the US market currently, and what share that we are anticipating? Something on those lines.
So overall, let's say on product-wise numbers we don't give, but we did reasonably good business in first 2 months of the current financial year on hydroxychloroquine. In this month, overall, because government was talking about that they are relaxing the restriction, and therefore I think from 25th of May they have stopped giving the overall DGFT approvals, and now it's around 17th of June. So the approvals are not coming and neither notification has come. So we are also stuck up, and other people everybody is stuck up. No consignments are moving except for the consignment for which approvals were given prior to that. So those normally after your approvals are there, immediate shipment happens. So hardly few approvals are there which are for little longer period. So in this month there are uncertainties are there, but hopefully I think notification should be out in few days time and we should be back in the business. As far as the US part is concerned, we have exported some quantity there, and it's too early that what kind of market share we gain. So probably we are working hard on that, but time only will tell, and right now we will not be able to highlight that what market share we are expecting and all, and what is the market number.
Okay. How big would be the market share? Any sense on that?
Right now, I will not be guessing anything because
no problem.
Because Trump has withdrawn. I think US FDA has withdrawn your emergency use of this particular drug in US, and it's a regulatory matter, so I will not like to comment on that.
Fine. Second thing, sir, on the interesting aspect that you have said this time, what is the captive API based sales that you have achieved in FY20? So that is 55% versus 54%. But when we talk about captive API, what is the level of integration, sir? Whether it is just a couple of N-1, N-2 onwards to the IPA level of integration, or it is kind of to the KSM level or to the intermediate level. So on that front, if you can qualitatively share something on that, and that would be useful.
So we are not in a business of, let's say, the first to file and first to market. So we don't look at N-1 at all. Yeah. Our whole focus is to build the very robust and competitive product, and therefore we always look at the products that how do we produce in house itself, or maybe outsource from India itself, or get it manufactured, give technologies to others and get it produced from others. So therefore the whole supply chain should remain in our control, and that's always focus. Maybe then when we starting products we may import certain KSMs and start, but once the volume start building up, we then take it up, everything, the KSM also production in-house, and we have very good level of integrations on most of our API.
Okay. So that means for most of the key APIs, it is fair to believe that we would be either starting.
It's a very good level of integrations are there, and we have, and therefore our inventory days are also little higher because we have to keep the KSM production, we have to keep the API productions, and then your also formulation production. So inventories are there at a multiple level because of that. But
okay.
But the production of KSMs and intermediates help us to keep the absolutely supply chain in control and cost efficiencies in control.
Okay. Considering this.
Sir, I'm sorry to interrupt, but I'll come back in the question.
Yeah, can I just complete this?
Yeah, please come back in the question. Sorry. Yeah. For the follow-up, kindly come back in the queue. Thank you.
Yeah, sure. Thanks.
Thank you. We have next question from the line of Kunal Dhamesha from Systematics Group. Please go ahead.
Good morning. Thank you for taking my question. So the first question is on the revenue guidance that you have provided of 14 to 17%. Does it include the hydroxychloroquine tailwind? If yes, is it till what we have supplied till now, or do you expect further addition to what we have supplied? And then I'll come up with another question.
As far as hydroxychloroquine is concerned, we are a long-term player, and we market these products in a lot of ROW markets for rheumatoid arthritis and osteoarthritis. And it's a large number of countries we market that product. We market this product in most of the generic, in Europe, European market, in Austria, in Canada, and now we are exporting also to the US. So it's a very large amount of countries and very wide basket of countries where we market this product, and that is for your rheumatoid arthritis and your lupus. As far as India is concerned, we also market this drug for diabetes. And because of, let's say, its use in COVID, some kind of additional revenues has come in the current quarter. In last financial year, there was hardly any kind of things relating to hydroxychloroquine in the last 10 days of the month after the Trump's announcement as a game changer and all that. So there was hardly any shipment of hydroxychloroquine formulations and all. So practically, some kind of additional business has happened in the first quarter, and when we are finalizing our budgets in the month of March, those scenarios were becoming clear. So certain kind of things were factored in our guidelines, but we didn't factor your dollar rupee at 75. Our budget was at a little lower level of around 72, 73. So the cost is also increasing because of that, and also realizations are also improving. So those things were factored. But there could be some kind of upside because of your overall currency. But because of lockdown and all, certain hits are there in domestic markets and overall. So overall, we have factored into all these situations and then came out with overall guidelines of around 14 to 17% kind of turnover growth, which includes even additional business what we have done on hydroxychloroquine and also the significant government business which we have done in India in the first quarter of the current year, first 45 days. All orders of government we have completed within 45 days from I think 1st of April to 15th of May. So that business was also around close to around 40 crores we have done.
Okay. So as far as I understood, we have still assumed some growth to be coming months, right?
Yeah, definitely.
Besides what we have done.
We are still buying hydroxychloroquine, and those will continue. And as far as India is concerned, the ICMR guidelines are very much clear that it is to be used as a preventive. Also, it is used to be used in the early stages, and also when the person is in the mild kind of stage. Once person goes in ICU kind of situation, this drug has no role.
Okay. And secondly, on the same guidance that you have provided, if you could just provide more colors in terms of, let's say, broader moving pieces in terms of export formulations and export API, where do we see those moving pieces in FY21? That's it from my side.
Let's say export formulations and API will also have a good growth. Only domestic business, what we have projected is almost around the business growth of around 11.5%. API business will continue to have good growth, and domestic generic formulations also will have a reasonable kind of growth. So right now I will not be able to give you numbers, but yes, we have factored all those kind of things and then arrived at the overall guidance.
Okay. Thank you.
Thank you, sir. We have next question from the line of Nikhil Upadhyay from Securities Investments Management. Please go ahead.
Yeah. Hi. Good morning, sir, and congrats on good set of numbers. Sir, two bookkeeping question. One is on the console, we see a major jump in the depreciation. So if you can just help me understand why that jump has happened, so from 45 crores to almost 64 crore. And secondly, because we merged Noble Chemicals also, so is there a additional costs which would have come up, and if you can quantify those costs?
As far as the Noble is concerned, that NCLT order came in the month of February, and then that has been consolidated, but there is hardly any kind of expenditure has come, because since then in the month of March there is a complete lockdown and nobody is able to visit, so we have not done any kind of work on Noble till date. So there are no expenditure except the security cost which is currently there of the land. So there are no costs, and the plant was also not running of Noble. So last 14 years it was closed. So we will have to look at a fresh and then start. And this acquisition is largely because it's a low cost land, and we are looking for manufacturing large amount of KSM ourselves, and future journey of KSM we want to have from this particular place where the good amount of manufacturing will happen internally. So it will become a KSM site for IPCA in long term. But we have to apply for environmental clearance and everything, and that will still take long time. So nothing would happen on ground maybe around 1.5 years from now.
And on depreciation?
On depreciation front, when we done the Bayshore acquisitions, the acquisition cost was almost around the $10 million around that, and by and large it was assigned to the whatever ANDAs they were holding, and those ANDAs are depreciated by us in the fourth quarter of the current year by almost around $2 million. So that is based on that. So that has added to the overall depreciation going up.
Okay, so on a normal run rate, it will be around 44, 45 only, or this 64 would be?
Yeah, that's true.
And sir, can you give the breakup of the different country-wise revenues for full year?
Yeah, 1 minute. Yeah, I'll give the numbers here. That overall, say, your promotional markets, we have done business of around 77 crore as against 94 crore in last financial year. This business was hit because of shipment could not happen in the month of March. A lot of shipment got delayed. So the overall there is a decline of almost around 19% on promotional market, which include CIS, Asia, Middle East, Africa, Latin America, and Africa. As far as the European business is concerned, there is a growth of almost around 47%. Business is around 75 crores as against 50 crore in last financial year. Australia, New Zealand has grown by around 28% in this particular quarter. Canada has grown by almost around 53% in this quarter. Business is around 22 crores as against 14 crore in last financial year. South Africa has also grown by around 33% to around 22 crores as against 16.5 crore in last financial year. So overall generic business is around 165 crore as against 117 crores last year. So generic business has grown by around 40% in this particular quarter, but the promotional market business is down by around 19%. Institutional business more or less remain at the same level of around 40 crore. Last year it was around 41 crore. So overall generic business, including institutions, has grown by around 29%. to 204 crores as against 158 crore in last financial year. And overall export formulation business growth is around 11% because of decline in your promotional market business. So overall business is around 282.5 crores as against 253.6 crore in last financial year. So around 11% kind of growth is there in the year. So that is the Q4 number. If you look at the whole of the year number, we did a promotional market business of almost around 381 crore as against 361 crore last year. So there is a growth of around 6% is there on that, and largely it is hit by the fourth quarter number. And had there been no lockdown, this business also would have grown by around 12% kind of thing, because good amount of shipments were held up. As far as generic businesses are concerned, we done around business of around 659 crores as against 521 crore in last financial year. So around 21% growth is there, of which I think Europe has grown by around 31% to 319 crores as against 243 crores in last financial year. Canada has grown to 78 crores as against 48 crore in last financial year. South Africa has grown to 110 crores as against around 96 crore, and so around 14% kind of business growth is there. So overall, generics per se has grown by around 27%, and including institution, because institution business growth is only 7%, so it's around 176 crores as against 164 crore. So around 7% growth is there in institution business. So overall, generic business has grown by around 22% to 36 crore as against 686 crore in last financial year. And overall export formulation business, including branding, is 1,222 crores as against 1,148 crore. So around 17% growth is there in that. So these are by and large their continent and countrywide numbers.
Thank you, sir. Thanks, sir.
Thank you, sir. We have next question from the line of Bhaumik Patel from Canara Robeco Mutual Funds. Please go ahead.
Hello.
Bhaumik Patel. Yes, please go ahead.
It's Amit Kadam. Thank you for this opportunity. So my first question is that are we providing guidance for the tender business for FY21? Second is, question is, because now government is coming out with this policy to boost API and intermediate manufacturing in India, and we have this Noble Explochem acquisition what we did last year. Are we going to seriously or maybe just speed up something on this particular thing where we can take this as an opportunity?
We are considering certain kind of API even on fermentations and also, but not the antibacterials and all, and certain other APIs. So that definitely will be taken up. But those will be happening at the current sites. May not happen at the Noble Explochem, because Noble will have to go through the complete your environmental clearances and other things, and that will take little longer time. And overall, if you look at our institutional business, that's in the current financial year is likely to be around 240 crore or so as against 176 crore in last financial year.
Okay. And just last question. So for the API sales, because with a strong base of FY20, we are still comfortable of growing at double digit for FY21, because we understand there could be a capacity or something, a hurdle for us to grow in API this year?
A lot of debottlenecking exercise has been done by us, and that's continuing basis is going on. So there will be good growth on even on API front in current financial year. In spite of reduction in prices of certain sartans.
Okay. That's it, sir. Thank you.
Thank you, Mr. Kadam. We have next question from the line of Bharat Celly from Equirus Securities. Please go ahead.
Hi, sir. Congrats for good set of numbers. So I just wanted to understand how the overall input prices are moving for us. Are we seeing any spike in the prices for KSM or the API or the other ingredients?
Let's say if you look at the whole of the 20, there was significant jump out there in KSM prices in the beginning of the year. and then the softening trend started from the somewhere after Q2. So that trend has continued even now. So the prices have not moved up to that level, and there is a still softening trend is there. And as far as the key starting materials, or maybe I would not say key starting materials, it's basically basic materials which we import from China for hydroxychloroquine. Those prices have significantly moved. Some of they are starting chemical wise from around $5. Some of the people has imported at $45, $30, those kind of things from $5. So those the kind of the jump are seen. But as the numbers of COVID were starting they have started coming from January and all onwards from China, and looking at those situations, we have imported certain those kind of basic materials from China well in advance for much higher inventory levels, and therefore we have not paid a single penny extra on the import of those kind of starting materials, and now prices are normal again. So as far as we are concerned, we are not impacted, but industry is impacted.
Okay. So you're saying that for the future shipments also, which will be now taking in the future, will be also that has already started seeing the normal prices.
Normal, yeah.
Okay. Thanks a lot, sir. Thanks a lot.
Thank you, sir. We have next question from the line of Manoj Garg from White Oak Capital. Please go ahead.
Yeah. Good morning, and thanks for taking my question, sir. Hope all safe and doing well at IPCA. So just want to understand, basically since you have commented about, government supply on LCQ for the first 2 months. So would you like to call upon, sir, what could be the total contribution of LCQ in your this 14 to 17% kind of guidelines which you are giving for FY21?
Normally on product numbers we don't talk, but as far as the government is concerned, this is in public domain. We have done almost around 12 crore tablet supplies to the various state government and central government over a period of around 45 days, and we have realized around 42 crores. So that's the number I can talk. But on export fronts and API front and all, I will not be able to give you any number.
Sure. Understand, sir. And second thing, like with your guidance of 140, 150 bits kind of margin improvement, even in fiscal 21, we would be closer to the average industry margins of around 22-23% by fiscal year 2021. While we have seen a lot of improvement in terms of operating leverage over the last few years, how much you feel still the stream left in terms of further expansions in the operating margins, going forward maybe beyond fiscal year 21?
We still have lot of rooms to improve the margins, because some of our plants which are more on formulation side has yet to become productive, and they are still incurring losses. More particularly my Piparia plant and SEZ plant. As the utilization of those plants improve after the US resolution, some of the European products and other products we have started taking at those sites and improving. But significant capacity utilizations on those plants will further improve the margins for us, because all costs are incurred also today.
Okay, sure. And if I can ask the last question, on the subsidiary side, sir, like we have seen around 35-40 crores kind of losses in this year. Anything you would like to highlight about that in terms of the path to profitability in those subsidiary, and what could be the timeline?
Let's say there are the three major operations are there. One is your Onyx, which is there at UK, and they do the CRAMS business. They have done very well, and they have contributed almost around 18 crores of profit in the current financial year, and their growth is very, very good. So almost around, they have done business of around 8 million pound, and I think around 18 crore kind of profit they have contributed to the in the consolidation. There are the two other operations are there. One is your Bayshore. Bayshore has been acquired by us to become a front end for our formulation sales in US. Currently, they are doing business which is mainly for trading, and trading margins cannot be very significant, and they contributed in the current year almost around 155 crore of business, but their overall profit before amortization is just around $2 lakh. So very insignificant profit, and we were not really looking for a big profits to come from the Bayshore on trading front. If they are able to manage and give some kind of profits on trading and continue that, because that acquisition was by and large to become for our front end for the US, and this loss of Bayshore is only because of amortization of cost what we have paid. So that loss is a kind of your amortizations of those costs, not the real loss what they have incurred. They have contributed some kind of EBITDA to the company, and we don't expect a very large profits to come from that operation till the time our operations and they become front end for us. And we already sent some certain kind of shipments of hydroxychloroquine, and as the resolutions happens, then they will become front end, and then they will start contributing the overall to the profitability of company. The third operation which is there is a Pisgah site, and which is by and large we have acquired for again front ending the CRAMS business from UK. There are certain projects which we got again because of this lockdown and others. Those kind of projects are getting delayed, and certain APIs we have transferred the technologies, and they have done the initially piloting and all, but US inspection of that is pending. So those commercialization is also not happening there till the time the US inspection happen. So that is what is the operational the losses what they have on that. At the time of acquisition, they were certain product they have out licensed certain patent, and they were getting almost around over $1 million as a royalty. But the party to whom they have given technology, they have significantly lost the market share. So that $1 million royalty has come down to around less than $2 lakh kind of royalty. So whatever the on acquisition price which we have factored, some kind of that has taken as an impairment. So almost around 27.6 crore we have taken a hit of impairment charges, and those royalties were very consistent for a very long period of time. So looking at that, we have done the factoring around that time of acquisition, but suddenly the parties to whom they have given the technology, this patent out license, they have significantly lost market share, and we had to factor that your impairment in our balance sheet. So these are the major operations which we have, and so we don't expect much of the profitability to come from Bayshore till the time Onyx will continue to do very well, and Pisgah there will be improvements.
Yeah. So whatever the difference between.
I'm sorry to interrupt. Would you like to come back in the question queue?
Sure. Thank you very much. Thank
you, sir. We have next question from the line of Gaurav Hinduja from GETL Capital. Please go ahead.
Yeah, thank you for taking my question, and congratulations on a great set of numbers. My first question is with regard to your branded export portfolio. Since we saw a marginal dip of 19% this quarter, any specific guidance on how we could look at it in the future? And besides the supply chain restrictions, is there anything else we can attribute this dip to?
Let's say almost around 26 crore worth of shipments of these markets could not go. So the first quarter will say a very great set of numbers again, because these shipments have gone in the first quarter of the current financial year. But again, what would happen is lot of countries are having lockdown situations and others, and similar kind of situations are being faced in various markets. Like say we have Russia as a big market, and there again the people my medical reps are not able to operate, and they are not able to meet the doctors and other things. So some kind of business dip will happen, but that will offset by this additional kind of the business and we have projected almost around 12% kind of growth in promotional marketing next year. Had it been a normal situation, this growth because of this 25-26 crore shipment would have been significant, but we have factored in all these kind of numbers, and then only given you the overall guidance of around 14 to 17% kind of numbers.
Oh, okay, sir. And my second question is with regard to your CapEx guidance for the full year for next year, considering you are planning to add more capacity. So any guidance on that front?
The overall CapEx number will be almost around 250 crore in the current financial year. Out of this, maybe around 60-70 crore will be spent on Devas, on the initial startup and civil and all those kind of numbers that will be there. Rest, maybe around 180-90 crore will be the normal CapEx, which will also include certain kind of initiatives on the clean energy and your solar, which will be almost around 20 crore. And a lot of CapEx is going on automation part. So maybe, and also upgradation of certain kind of lab software and all, a lot of those software upgradations and all. So maybe around 15-20 crores will be spent on that aspect. And automation expenditures maybe around, around 15 to 20 crore. And certain environmental expenditure and all. So by and large, it's a normal kind of capex, and also to do the debottlenecking of the capacities, which is continuous basis happening, particularly on API side. We don't foresee much of the expenditure on formulation side, except around 30 crores, which we are spending again on our Pithampur site to keep the site ready for significant higher capacities. If once the US resolution happens, that will be the site which will do the more formulation business. So we are preparing for future.
Okay, sir. And any trends?
Sir, I'm sorry to interrupt, but I'll come back in the question queue.
Okay.
Thank you. Kindly restrict questions to per participant. We have next question from the line of Sameer Baisiwala from Morgan Stanley. Please go ahead.
Hi, thank you. Sir, is it possible for you to tell us, how did the sartan prices, at what level it peaked, and from the peak, how much it has come off in Q4 and Q1? And is this now normalized, or do you see it roll down further in the next couple of quarters?
Let's say large fall has happened in valsartan prices, which used to be almost around 270 to 350 kind of things. Of course, at that level we didn't enter into. We entered at much later level, and the current prices may be around $125 to $150 range. So that's the kind of level has happened. As far as losartan prices are concerned, they were normalized in last financial year in the Q3, Q4 thing. So maybe around 100 to 110 kind of dollars. That's the pricing which is there.
Okay, and do you think it's now stabilized, or do you think it can?
Yeah, they are stabilized. They are stabilized because the Chinese players are now in the full swing also on those kind of products.
Okay, so my second question is on the US business. So just your perspective beyond the remediation, how would be the contours of recovery? Do you need both Ratlam API and Pithampur formulation, or even if one comes on board, you can start the business, and how would it ramp up, in 1, 2, and 3 years?
We are really not looking at today because first thing first, let the FDA get clear, and then we will be able to talk all that, because even if we give numbers and it get delayed, then so let that thing happen, and then we will give the guidelines. That would be better, because that is what then we can perform on those guidelines.
Okay, sir. That's all. Thank you.
Thank you, sir. We have next question from the line of Bharat Sheth from Quest Investment Advisors. Please go ahead.
Hi, sir. Thanks for the opportunity, and congratulations on good set of numbers. So just want to understand from 2-3 years perspective, when one side we are saying that some of the plants we are not able to make it because of it is not fully operational, so it is incurring loss. And other side we have acquired a Noble Explochem, for future expansion. So want to have some kind of, your broader understanding, how do we really see and what we are doing to ramp up, utilization of these existing plants which are currently not making profit.
Let's say there are three things are there. One is your formulations which are for domestic market.
Yeah.
We don't have much of surplus capacities, and neither we are setting up the plants because Sikkim plant was expanded in last financial year, and that will suffice for the capacity. So we don't need any kind of capacities, and neither we have significant surplus capacities as far as domestic plants, domestic formulation plants are concerned.
Okay.
As far as the generic plants are concerned, generic exports,
Yeah.
and as the Pithampur and Piparia plant, these are two plants, were set up for the US exports.
Correct.
And currently, the US resolution is taking time. So these are the two plants which are having a lower capacity utilization and incurring losses currently.
Okay.
As far as API is concerned, we have been continuously talking that our API business has significantly moved. It's almost around over 1,100 crore, 1,200 crore kind of business now. And it's also continuously growing. And we are facing a lot of capacity constraint as far as API is concerned. Plus, in order to have a lot of, say, supply chain in control for the future and upcoming APIs and API which we are currently importing certain KSMs, we need the kind of capexes and others for also API as well as for the key starting material. So Devas plant is largely for API side, and Noble acquisition is largely for the long-term requirement of my KSMs. So these are not the kind of thing which where we have any kind of surplus. On continuous basis, we need to do the debottlenecking of capacities on API to the sustained order flows and currently what we have. So that's what is currently happening. So it's only for the formulation plants which were made for generics. There we have surplus capacity, nowhere else.
Okay. So and then on Noble Explochem, how exactly we have, since it has been fully acquired, and I understand that all environmental related clearances are already there. So where do we start? I mean, giving some...
There is no, say, environmental related clearance will start now. The process will start now. There is nothing, it's only, say, plant, it's a land with some kind of infrastructure, good civil constructions and lot of those infrastructures are there. But the plant has been closed for last 14 years. So that has to restart and for the KSM production, and it was a explosive plant with good nitration chemistry. So a lot of those kind of KSMs which are based on nitrations and other chemistry, we will do there. But still, I would say that anything starting there on ground will take minimum 18 months from now.
Okay, thank you very much, sir. That's all from my side.
Thank you, sir. We have next question from the line of Rahul Sharma from Karvi Stockbroking. Please go ahead.
Yeah. What is the R&D spend in the current year, sir?
R&D spend is almost around 2.5% in current year. Because now we are not incurring any kind of cost relating to US.
Okay. How much was CapEx and...
CapEx was hardly any because it's only 3-4 crore. All is revenue, and revenue cost has moved up.
So I missed out the revenues of some of the key geographies like US.
I will separately provide you those numbers after the call.
Okay. Thank you.
Thank you, sir. We have next question from the line of Amar Maurya from Alpha Accurate Advisors. Please go ahead.
Yeah, hi, sir. Thanks a lot for the opportunity. Sir, firstly, my first question would be, in terms of the operating guidance which we had given, this includes the Forex before Forex, or this is after Forex?
Let's say I have said that Forex, our balance sheet is by and large balanced now. Assets and liabilities are balanced. I have hardly ECB loans of around $19 million as of March. Out of these, $9 million would be paid in current year, and I think balance would be only say around $10 million to be paid in next financial year. So there are long-term loans are hardly any balance sheet, and the balance is only on the cheaper finance which we take on packing credits in foreign currency and also on the bills discounting. So and against that we have the receivables and all. So by and large, as far as balance sheet is concerned, we don't have any kind of balance sheet risk, because if we have $55 million of receivable, around same is the number of import payable, your ECBs and your packing credits in foreign currency. So rupee dollar at any level will not impact the overall balance sheet. But as far as my forwards are concerned, currently we are hedged at around 47% of our NFE level currently, and The hedge is also at good levels are there. Most of the hedges has happened after the rupee dollar has moved in, and therefore whatever outstandings were there at the March end, certain kind of mark to market was provided, and that has resulted in around some kind of losses which are 13-14 crore in the current financial year. But by and large, as far as standalone basis, asset liability basis, we don't have much of balance sheet risk today on account of forex.
No, so your OPM guidance, what you have given about 150, 170 bits improvement is on FY20 before forex.
We have factored in at around 72 when we made the budgets. I don't factor 75.
That we understood. My question is, on what base of FY20? FY20 number base before forex loss or after forex loss? Because we are talking about a bits improvement, am I right? We are not talking about
sir, as far as the forex loss or gain is concerned, we cannot anticipate today what will be the dollar rate on 31st March next financial year. So whatever guidance we have given is based on dollar to rupee about 75. So beyond that, anything happens or below that anything comes, so there will be some exchange gain or loss.
That I understand, sir. My question is, let me again reframe my question. Yes. On what FY20 base you have taken this number? Whether FY20 base is EBITDA before forex loss or EBITDA after?
It is before forex loss or gain.
Yes. Perfect. Yeah. And my second question is in terms of the capital expenditure which you have talked about, the 250 crores which you are planning to do now. By when you think it will start commence the operations, in which year?
Out of this capex, what we are talking for the current financial year, about 40-50 crore will go for Devas. That is all startup capex, building, site development and all. The production of Devas will happen maybe in the year 2022-23. Yes, all capex are all routine maintenance capex, and little bit for environmental and little bit on solar and wind power energy.
So when that capex came for Devas, this capacity can give potentially what kind of revenue?
Devas is a vast land bank. There is scope to further expand that capacity. Initially, we are talking about 3 API manufacturing plants. Going forward, you can expand that also.
Oh, I see.
Yeah.
Understood. And tax rate can be...
Sir, I'm sorry to interrupt. Would you like to come back?
No, there is no tax break.
No. Any guidance on tax rate? What's the tax rate one should assume for a full year?
We have almost around 300 crore of around MAT credit lying with us, and I think another 2 years we will remain at to utilize those kind of MAT credits. And thereafter we will be around 25%. Currently, because of MAT credit utilization, the tax rate is around 17.5%.
I see. Okay, great. Thank you very much and wish you all the best.
Thank you.
Thank you, sir. We have next question from the line of Susmit Patodia from Motilal Oswal AMC. Please go ahead, sir.
Hi, sir. Thank you for the opportunity. Hope everyone is safe. I want to check, these times must have been difficult for some of the smaller pharma companies, domestic. So are you seeing any nice M&A opportunity now? Would you be looking at it?
We have been always looking at M&A, but so far we have not succeeded in any opportunity wherever we were interested. So we keep looking on whatever opportunity is there in the marketplace, and we are evaluating every opportunity that comes to us, but nothing has happened so far.
So the deals are not getting better even in this environment?
No.
Okay. And so second question is, you said that the R&D spend is down to about 2.5%. So, assuming US comes back at some point in time, where do you think this goes and stabilizes?
Over a period, it will increase to about 3.5 to 4%.
Okay, that's all.
So the rate when we were doing lot of work for the US market, it won't go beyond 4.5%. It won't.
Okay. Thank you, sir, and best of luck.
Yeah.
Thank you, sir. We have next question from the line of Prakash Goel from ICICI Prudential AMC. Please go ahead.
So congratulations on good set of number. I have 2 questions.
Yes, please.
One is with respect to, can you summarize the guidance across India, institutional, API, generics and branded?
it is very difficult period to give any guidance on India business. But overall, we are confident we will grow our business by around 14 to 17%. Based on rupee-dollar rate of about 75, that is what we have factored in our budget. That is the only thing what we can say today. And in this growth also, as Mr. Jain said, there is some benefit that has come to us because of sales of hydroxychloroquine sulfate between April and May. And some more orders are there. As and when the exports get cleared, we will supply those orders also. So there would be definitely some contribution from the sale of hydroxychloroquine sulfate, which we have factored in our growth, what we are giving, 15 to 17%.
Okay. So the additional order which you are mentioning, if that gets applied, the 14 to 17% guidance will get increased?
Definitely supplied because of confusion in lift of this embargo on hydroxychloroquine sulfate by government. There is some confusion. Earlier we used to get permission to export, but because now it is getting lifted, this embargo, there is confusion. Neither the notification of lifting that ban has come, nor any approval order to order is coming today. So last 15, 16 days, even though we have order, we have ready goods, we cannot supply.
My second question is impairment in pizza. What is the plan ahead? And as to why
whatever that impairment was there, as Mr. Jain said, it was based on the future receivable of the royalty what we factored when the acquisition price was paid. This was one time. There is nothing left out in that.
And what is the plan ahead? That is the question.
IPCA, as Mr. Jain said, we acquired that unit more for CRAMS related activities. So several projects are ongoing, but because of this lockdown, there is some delay. Plus 3 to 4 products of our own, we will be doing site transfer for manufacturing and sale in the US market, APIs. For which one product we have already filed site transfer application with US FDA. Second product, the application will be filed maybe in this month. Another 2 products are under development.
Thank you so much and all the best.
Thank you.
Thank you, sir. We have next question from the line of Anubhav Sahu from MC Research. Please go ahead.
Hi, sir. A couple of questions. One is, what was the capacity dedicated to SC12 before COVID and what is it now? And are we getting...
As far as hydroxychloroquine capacities are concerned, we were earlier producing around 17-18 metric tons, and current production is around 25 metric tons. So that's the only change. We didn't increase any capacity on hydroxychloroquine. That's the installed capacity what we have. And And for a one-time sales, the kind of opportunities you don't incur the capex and increase the capacity, because hydroxychloroquine is a drug which is very specialized drug only for rheumatoid and arthritis. The COVID is a small time business opportunity, and that we have done. Whatever businesses we have done with producing at full kind of capacity, and also we were holding some kind of stocks, and that we have converted and did the formulation kind of business, a good formulation business. But a lot of people are expanding the capacity. They will repent because it's very difficult to sell these kind of products unless you do the marketing for rheumatoid arthritis and all that kind of things. And we are a global player as far as this product is concerned, and we have footprints practically everywhere.
Got it, sir. And so whatever we are producing right now, are we getting all the required APIs for it captively, or do we need to source part of it?
Oh, we produce KPIs and also the KSM ourselves. We don't depend on anybody else.
Okay, even for the increased production, you don't need anything from us?
No, we don't depend on anybody.
Okay. And sir, can you guide for the 1.5% EBITDA margin improvement which you are guiding, would it be largely because of the change in product mix, or some operational cost saving also you are accounting for?
It's a mix of everything.
Mm-hmm. Okay. Okay, got it. And sir, last.
I'm sorry to interrupt, sir. Would you like to come back in the question queue?
Okay, sure.
Thank you. We have the last question from the line of Nikhil Upadhyay from Securities Investments Management. Please go ahead.
Yeah. Hi. Thanks for giving the opportunity again. Sir, just two things. One is on this institutional business. Just want to understand, you said that from 175 we would probably reach 240 crores. But do you see any risk that the budgets which are being allocated towards the products and all could be impacted, because most of the countries and most of the agencies are devoting a lot of money towards research and fighting COVID as of now. So just to understand this number a bit better.
We don't foresee much of risk, and it's also additional business which we are currently doing on injectables. That's also contributing to the better growth in current financial year. And that is included in our guidance for from 175 crore to 240 crore number. And there is a good visibility now because last year the procurement has not happened to that level. So institutions are also procuring the higher procurements are happening, and also additional business which we are currently getting on injectables. So that is factored and then given the 240 crore kind of balance. Yeah.
Okay. And lastly,
don't
sir,
see much of risk on that.
Okay. Lastly, sir, if we look at it like in terms of our capex and a lot of capex we are putting towards API and KSM. Now, considering if US status quo remains for the foreseeable future, because we don't know how FDA will come out and things, and there is too much uncertainty. So keeping that aside, would you say that for IPCA, this API contribution, which is around 25-26%, could probably move to 30-35% over the next 3-4 years? And if that is the case, when we are selecting the APIs, and so would we be the lowest cost producer there in the APIs where we are competing? And so if you can just help me understand this over a 3 to 4 year period, how do we see the mix of API and formulation, keeping US status quo as it is?
As far as your use of words that lot of capex, we don't have lot of capex as far as the API overall is concerned. We are still very conservative as far as capex is concerned, and largely this capex is maintenance capex. It's only, say, current year around 50-60 crore may go for Devas to by and large in civil construction and other, and maybe around 200 crore capex will happen a year thereafter for installations and other things. So that's the thing. But current financial year is, let's say our depreciation itself is more than 160-70 crore. So to that extent, there is always a maintenance capex, and also we are spending a lot of capex on automations on various products, and that's what I talked that yes, we are getting a lot of consistencies and also improvement in overall yields and the much lower cost of production. So that's the focus which we have, and good amount of capex will be spent in current year also on automations. We are also spending good amount of capex and again on upgradation of lab softwares and a lot of other production related software, and maybe around 20 crore will be spent on those kind of softwares in current financial year. So that's a running kind of thing, and it's by and large just a maintenance capex. Yeah. And as far as API visibility is concerned, yes, API business is continuously improving and will continue to improve. And I think API can become in next 2-3 years almost around 30% of our business. And by and large, we don't select any API unless we are not interested in formulations of that API. So we look at if we are interested in formulations, then only we produce. Only just for selling API, we don't produce any API. We don't do work on API if it is only for selling API. So primary focus of API is formulation, and once we are there in API, then we don't ignore it. So that always help you to know that from which quarter the competitions are coming, what are the costs evolving, and continuously work on process efficiencies and others, and backward integrations, and that helps you to reduce the cost and continuously work. And we keep on filing the variant of API. The processes as the cost reductions keeps on happening. So it's a continuous journey.
Okay. Thanks a lot, sir.
Thank you very much, sir. Ladies and gentlemen, that was the last question. I'd now like to hand the conference over to the management for any closing comments. Sir, over to you.
let's say, overhang for us is only the US FDA, and we are, as a management, we are continuously committed to see that this resolution happens, and we are focused on that. When it happens, it's not in our hand, but we are fully committed to do that. And thank you so much for participating in the call and sparing so much time. Thank you.
Thank you very much, sir. Ladies and gentlemen, on behalf of IDFC Securities, that concludes this conference call. Thank you for joining with us, and you will now disconnect your lines.